Good evening and welcome to the weekend edition. My name is Peter Reznicek from ShadowTrader.net. New highs this week, new all-time highs, S&P and NASDAQ 100. Exactly what we were talking about last week about momentum traders being in control and all that poor structure underneath us in the market profile. All of that came true this week. Markets kept powering higher, and as I was saying in last week's episode of this show, it's not a bearish thing, even though the market feels like it's getting ahead of itself, and I showed you all that structure in the profile that hasn't been cleaned up. It doesn't matter. Buyers are in control, and they seem to be moving forward, and over the last couple of days, and this is what I think is the real story in the markets, is that over the last couple of days, we've had a little bit of a pullback from those highs, but as I'm going to show you very shortly, it has been so mild, and it feels like sellers just cannot get engaged in this market whatsoever, right? Without further ado, let's go over to the charts and find out what's really going on. The key benchmark index that we watch every single week, every single day, of course, it's got to be the S&P 500, starting on the daily as we always do. This is where really all TA should start. If you've got an end of a week, you can be looking at weekly charts as well. End of a month, I think it's important to look at monthlies, but generally your TA is going to be on the S&P daily. So let's take a look at specifically what's going on this week. So obviously, as I was saying, we got the breakout to the new all-time highs. The prior all-time high was 52.64.85, and we broke out, okay? That's all looking in the rearview mirror, and everybody knows that. I always want to be looking forward and trying as best as I can, even though I only speak to you once a week in this forum, to be looking ahead and kind of give you tips and pointers on how you should navigate this. So here's how I'm looking at it coming into next week. The big story here, as I was alluding to in the intro, is not the fact that we broke out, not the fact that we're all-time highs. To me, the big story is how weak the pullback was over the last 2 days. You want to keep your TA as simple as possible and just be looking at the 8 and 21 EMA on the dailies, trend lines, and where that prior high is. Notice that as we pulled in, this Friday, I'm speaking to you on Friday, May 17th, options expiry, so those days can be a little bit squirrely, but notice how we closed at the high of the session, and where was the pullback in relation to the breakout level? It didn't get there. So I think that the focus next week for everybody has to simply be that if the market keeps going sideways here without ever even pulling back to that, that's the most bullish scenario, okay? The second most bullish scenario would be if the market pulled in a little bit and came right down to that prior high. That would be a buy point, because obviously the late to the party longs that weren't able to participate in the breakout, that's where all the buy orders are sitting, right? That just makes perfect sense psychologically. That's where they're going to be sitting. But not only that, notice that since we got the pinch of the 8 on the 21, 8 has been riding price higher, and look where it's about to get to. The 8 EMA is literally about to rise right up to that prior high. So I think that's going to be the key level going forward. Watch that. It's the 52.64.85. Call it 52.65. I'm a big believer that the tone out there is very bullish. Momentum traders continue to be in control, and that sort of momentum can carry on much longer than you think. So most importantly, don't fight this. It's a put sellers market. It's a call buyers market, and you want to be long equities here. I don't want to bore you by showing you the NASDAQ 100 daily chart, because obviously it looks very similar to the S&P. I will just say that it also broke out a few days ago to a new all-time high at the same exact time and day that the S&P did. So whatever lag we were talking about, if you recall in prior editions of this show, we were talking about a lag there where the NASDAQ 100 was a little bit behind. It is no longer there because they are both at all-time highs now. So that's one thing to keep in mind, is that the NASDAQ 100 is no longer lagging, and that's important because these two markets act as sort of a push-pull, and they work in tandem, and you need them both to be strong for the market to keep making new highs. It doesn't really help if one is dragging a bit. So that's a situation there, something to sort of bring into your narrative and remember that going forward. But what I really wanted to show you is this hourly chart of just the RTH sessions. This is just cash. This is NASDAQ 100, no futures. And the thing I wanted to point out is just the confirmation of how strong this momentum is if you are doubting this market at all. Since the beginning of May, the action here, I'm starting all the way back here since the beginning of May. I want you just to look at the hourly bars and how much selling has there been in this market in terms of liquidation breaks on the hourly, okay? There's a little bit of volatility here. I'm just circling like whatever bars are red. Okay, there's one bar, there's a bar, maybe here, but it barely moves. Okay, there's a liquidation break, but it doesn't even make it below the low of the prior hourly bar. And then here's the pullback that I just talked about, which has been Thursday, Friday of this week. And what is the number one characteristic of these bars? Lack of range expansion. And if you're trading in the swing time frame of 2 to 5 days, which I do very heavily, especially using weekly options, as I do in my advisory, the hourly time frame is one to really pay attention to. And this lack of momentum to the downside is speaking volumes to me. So if this dynamic continues, where you see liquidation breaks occur, and then you notice if you can just pull back on the charts a bit, not dump your position, take it easy, don't freak out, pull back a little bit, give it some time. Notice that in this particular market, liquidation breaks are literally lasting 1 hour or less, which is amazing. I mean, there's just been no downward movement. And again, whatever pullback we've gotten over the last couple of sessions is really speaking volumes to me that the buyers are so much in control. Sellers are really not getting a foothold here. Sellers are definitely in a low confidence state, and you can see that simply just by the shape and size of the candles, where you can see what does it look like when the market moves up. You see the expansion of range on some of these green candles, right? How large they are. There's plenty of expansions of range on the green, and look at how small we are on the hourlies here. I mean, it's a lot of dojis, it's a lot of bottoming tail hammers, shadows to the downside. Those are the types of breaks that we've seen over the last couple of sessions. Okay, time for a trade idea. I always like to give you at least one each week. The number one draft pick this week, believe it or not, is bonds, as in government bonds, TLT, SHY, etc., /ZB, however you want to play it. I think that it is a longer term trade that is setting up right about now, that is going to be in play for the rest of 2024 and plays into what I believe is going to be an easing cycle from the Fed that should start somewhere towards the end of this year. I know they've been pretty transparent. They keep kind of pushing it out. Data has been kind of conflicting lately, but when all is said and done, I think we'll probably see some cuts this year, and that also is going to help to fuel this trade. Before I get into the chart, let me show you this slide here that I've put together. This is a 20-year monthly of the S&P 500 using the SPY versus the TLT, which is the ETF for long treasuries. The candlesticks are the S&P 500 going back 20 years, and the purple line is the bond market. And the reason I wanted to start on this slide really quickly is just to kind of bring home the point that the old way of thinking of that if equities are bullish, which as we just talked about in our first segment, I think they're extremely bullish right now. That rally may easily continue for some time. Just because equities are bullish, it does not mean that bonds can't be bullish too. I think this is kind of outdated thinking. And as you can see in this chart, we've had lots of periods where equities have been rising, and bonds, even though they have a lot more volatility, they've actually been rising as well. You can see here market moving up, moving up, moving up, and you really only start to see this larger move down in bonds when the Fed really started getting deeper into the rate hikes, etc. So main takeaway from this chart is simply don't let the bullishness in the stock market scare you from starting to build a position in bonds that I think is going to pay off handsomely throughout the rest of 2024. Let's get into the next slide here if we could for a second. This one here is where I've mapped out all of the Fed actions for the last 20 years and put it on an overlay above the chart of the TLT over the same 20 years. So the candlesticks here are the bonds using the TLT ETF, which is the ETF for long-dated treasuries. And as you can see here, the shaded areas, if it's green, it's where the Fed was raising rates, and if it's pink, it's where they were lowering rates. And right here, these are all of the Fed actions going all the way back in those 20 years. You can see we were at about 5.25 back here. Then there were some cuts, bringing it down. There was another small cut, another set of cuts here, bringing it all the way down to 1/4. This is the zero interest rate policy that was in effect for so many years. And you can see bonds slowly rallied during that time. Here's where we started to raise rates. They took it up to about 2.5%. There were a couple of interim kind of small short-term meetings here, I should say, where we cut. This is around COVID time, basically, as interest rates had to be cut relatively quickly. So they yanked it back down to 1/4, and you can see bonds rally, rally, rally. And then over here, this is the tightening cycle that we just came out of, where rates went back up to 550. And as you can see, that's when, once the raising actually started, that's when the crashes in the bond market actually started to happen. So the main takeaway from this chart is simply that there is somewhat of a lag to this, and you don't need to be waiting for the Fed to be cutting rates to be investing in bonds right now, basically. I think that the bond market is a little bit smarter than that and sort of acts a little bit ahead of time. And as you'll see in the charts that we'll get into in a second, we're already starting to see bonds coming off of a pretty big bear market, off of a double bottom, and starting to climb. And if this past history is any indication, that slow grind to the upside will then accelerate greatly once the Fed actually starts cutting rates, right? So let's get into our chart over here. I want to show you just a couple of trend lines that I've drawn in here on the TLT. I am currently long this now, but caveat, A, I'm not in a full position. I'm starting to build it slowly, okay? So I'm just now starting. I will build it much bigger. And B, it's not that good of an options trade. You can do some leaps. So maybe if you want to save some money, not pay, $90 a share for TLT, you may be able to do some leaps. But in general, the implied volatility in TLT is very low. And for me, being a weekly options trader and somebody who likes to really finesse the trade and get creative, there isn't a lot of opportunity here for me to, for instance, sell puts to finance calls or do some sort of a esoteric option spread or something like that. So for me, this trade is straight equity, but you can really play it any way you like. So in this bond chart, one of the main things to notice is that as bond prices were coming down into here about October of last year, notice that we came into this low here at around 82, and that actually ties in to a prior low from way back here. I don't have the chart zoomed out enough to show you that, but you can certainly follow along at home. You can see that this is actually a double bottom into the 82.5 level, and since then we've rallied, and I believe what prices are doing now is coming into a higher low, starting to get acclimated to the fact that rate cuts are coming and bond prices are starting to firm. And that's why I'm talking about this as a longer term trade. So the way to play it is take a nibble now if you like and start adding as we start breaking trend, right? These sorts of prices, even though they can be a little bit volatile, these sorts of things, once they get in motion, they tend to stay in motion for a long time. And that's why I think this is a trade that is going to take a while to play out, and it's really a trade for all of 2024. So again, I'm long a little bit here. You can add on the break of this downtrend, which is just over 90, and then there's a slightly longer term downtrend here, which puts you right about 94-ish, and that would be another add. And I think that once prices kind of take out this high here, which is close to 100, then you're going to see some sort of a larger advance. But anyway, start to build it slow. Use those trend lines to your advantage, and when you get the confirmation of a break of a line, then you add to the position. You get a break of the next line, add to the position further. Perhaps if you go above that horizontal resistance just under 100, that's the area to add even more. So remember, do it slow, do it in pieces, and add on the way up. And again, I think this is a trade that is going to develop over time for the rest of this year. Before we get into our special guest, I just want to get everybody up to speed on some new developments at ShadowTrader.net. Many of you who have been with us for a while know that we've been running the ShadowTrader Squawk Box since back in 2006, and we were the first chat room to ever be embedded inside of the Thinkorswim platform. That room is now split into two rooms, and we call that the Live Trading Suite. This is our team of traders here. We've expanded our bench a bit, as you can see. And the Live Trading Suite is pretty exciting because it is made up of two rooms, and you get both for the price of one. There's no increase in price. So we've split the Squawk Box into two rooms. One is called Stocks and Options, and one is called Futures. Futures room is more for futures day traders, and it is a dedicated chat room just for futures day trading. So really exciting stuff. So to that end, today's special guest is Michael Denblaker, who is actually this gentleman right here. He's a swing trader in our Stocks and Options room. I'm going to take a moment to speak with him now and get a little bit of insight into his strategies and how he does what he does. He's been really successful trading, swing trading equities on a longer time frame, and he believes that that is actually the easiest path to success for newer traders, especially those with small accounts, right? So without further ado, I bring you Michael Denblaker. Our special guest today is Michael Denblaker, joining us from Alaska, who is one of our traders in the Live Trading Suite, specifically in our Stocks and Options room. Michael, how are you today?
I'm doing good, Peter. Thanks for having me on.
Awesome. I'm so excited about doing this segment with you. In 2023, Mike returned over 240% in a small account, and he's on track to do that again in 2024. In 2024, this year to date, he's up about 140% employing those same strategies. So what I wanted to do in this conversation, first off, is if you could tell us a little bit about what exactly is your edge, how do you trade, how exactly do you achieve these results?
I'm probably the greatest example of a chart purist that you could find. I use simple candle charts. I do a top-down analysis from weekly candles. I often start looking at a chart from weekly candles. Sometimes that will direct me to look further out, but I top down from there and zoom on into what I'm interested in. And so I'm seeking the narrative. I'll use a term that you actually taught me years ago. You use the term looking for the narrative. And so I believe that every chart has a story. And so my job is to find that story using technical analysis. But I don't have moving averages or indicators on my chart. I have a firm faith that a simple chart will teach me or show me everything that I need to know. And then from there, I focus on my favorite part of a chart is a low volume zone where traders come and deflect themselves away, where traders don't want to do business. And when you learn to focus on those, I call them money lines, really, support resistance lines are horizontal are my favorite because they coordinate across all time frames. You know, moving averages, you have to, if you're trading crossovers and things like that, you have to coordinate different time frames and then pick which time frame you're going to take your entry. But moving average or a low volume zone, you can see it across all time frames. And from there on out, if a trade doesn't work, I get out with a small loss. I have a very, very firm conviction that all losers should be small, as much as it is in my power. So I do that by simple mathematical calculation. I take the account value and I look at that and I say, on this trade, I don't want to lose any more than 1% of my account value. So if I'm trading stocks, I'll just buy the amount of shares that will allow me to take the trade within the parameters of what the chart is telling me as far as where my stop order needs to be. Or with options. I like trading options a lot. I like using leverage. If cautious use of leverage, I think is very, very good. And so I'll position the size of the options, and I will go in or out of the money depending on what I feel like I need to do to give myself a little bit more leeway on a particular chart structure. So, but like I said, keeping your losers small is a big deal. And then it took me time when I moved away from short-term trading. It took me a lot of time to appreciate hanging on to my winners and learning to put that combination together.
That's beautiful, Mike. I've looked at your results, and I must say that the whole small loser thing I can see is big, because when I look at your results, I see you actually have not that high of a win rate, but the difference between your winning trades and your losing trades is staggering. You've got a lot of really tiny losers where you're willing to just cut it quickly if it's not working, but then you're letting those winners run, which is really, unfortunately, it seems so simple, stupid. That's what everybody should be doing, but this is what newer traders struggle with more than anything, because they tend to do the opposite. They'll leave a loser on because it's not a loss until they take it, and they cut winners short. But you've developed your style, and moved so far in your evolution that you're now able to do the opposite, which is the way to trade.
Yeah, I have about a 1.7 to 1 losers over winners at this point. I keep track of that, and I keep tabs of that and show everybody in the room how I'm doing as far as that goes. And because of the fact that sometimes these winners might take a while to find, sometimes if you look at my win-loss sheet, you'll see that there's losers that are grouped together. And for a short period of time, it looks like, man, this guy doesn't know what he's doing at all. But what I'm doing is I'm fishing. I'm hunting for the next trade, and I'm willing to take 2 or 3 shots. If I have a chart that I really like, I'll take 2 or 3 shots to get in the trade, because I have found that part of my edge over the years, as I've learned to believe my charts and perfect the skills of calling out the narrative, my strong suit is actually picking a larger term move, a larger time frame move. The trick is actually timing the entry. And so it's a blending of two skills, really, short-term skills to keep your risk low, and then backing out. And I always tell everybody, when I'm done with the trade, when I'm in the trade and I get the entry, and after I'm into the first stages and moving, and the trade is moving my direction, what I do then is I zoom back out and I monitor the chart from a larger time frame. For example, a lot of my trades, I don't even go in closer to than a 4-hour candle. But if I go into a 1-hour candle to fine tune the entry, as soon as the trade is going my way, I'll back out the chart all the way back out to the daily. And on my grid, my monitors, I'll keep a grid of my trades, active ones, and I won't even look at them on an hourly scale anymore. I look at them on the weekly scale or the daily scale to remind myself constantly what the potential of that trade is. And that's part of how I actually can pull off pretty good asymmetric trades. And that's the backbone of it.
I totally agree, Mike. I couldn't agree more. Before I let you go, can you just talk a little bit about why you believe that newer traders, especially people with small accounts, should actually not be day trading, especially stuff like futures, et cetera, and they should really be gravitating more towards a style such as yours?
Well, there's several reasons, really. I spent a lot of years trying to day trade it and could never get profitable at day trading. But part of the thing that people start out doing is they'll trade the ES contract and with a small account, because your broker will let you do that. Well, what you don't realize is that, first of all, the leverage that's there, you're not used to. And that leverage puts you in either a fight or flight mode or a greed mode, and you're really shutting off your subconscious learning processes. And it's not a natural environment. And so that's one obstacle right away, that if you have only a 2,000 or 3,000 account and you're trading that kind of leverage, there's a big disadvantage there. I used to trade crude oil with just a few $1,000s. Well, I'm back, if crude oil is $100 a barrel, well, what's the value of that contract? It's amazing, really. So that's part of it. The other part of it is that really you're jumping right in the fire as a new trader. Day trading, all you got to do is look at the stats. There's a very low success rate in day trading. And if you're starting out there, I use the analogy, it's like you're trying to become a brain surgeon, but you've skipped the school part. You're sitting in class on your first semester and you want to get right to cutting on somebody. That doesn't work. And the noise, the schizophrenic price movement that can be in day trading action is difficult to digest, even for an experienced trader, and much harder for someone who's just coming into it.
I totally agree, Mike. Thank you so much for sharing that insight on that. I think that more traders need to kind of think that through a little bit when they're starting. Thanks you so much for your time today. Glad to join us. For those of you out there, Mike is live 3 times a week. He does a show around midday in the stocks and options room of the Live Trading Suite. He also works very closely with newer traders, and I've kind of given him the nickname of the small account specialist, so to speak, because he's good at putting on those longer term swing trades, growing small accounts. So if that's something you're interested in, you can check us out at our site, and there's a link in the description below. And time now for Should I Do This Trade? This is where we break down an options trade coming from somebody out there, usually via email or in my room in the Weekly Options Advisory. And the winner, or the email that I select, whether it is a trade that should be done or should not be done, receives a free month of the Weekly Options Advisory. This week, we are speaking to Jinal Shah, who sent me this email and said that his idea is, should I buy a butterfly in Lulu for next week's expiry, May 24th, 347.50, 353.70 at a 35-cent credit? Let me know what you think. Thanks. So first off, when you look at the trade, understand it is a broken wing butterfly. Notice that you have the little minus in front of the 35. That means that he wants to buy this butterfly but receive a credit for it. The second thing you want to notice is that the strikes are 347 and 350 and 370. The 347 and the 350 are very, very close to each other, and thus that tells you right off the bat that this is not a trade that is going to expand in any way, shape, or form. This is a trade for credit collection. So let's go over the charts and see if indeed Janal should do this trade or not. This is a daily chart of Lulu, which is extremely bearish, especially in the face of what's been going on in the markets recently, right? Market obviously is very bullish. We've been rallying. This is a weekly chart of Lulu, and it is falling quite a bit. I think I may have said daily a moment ago. I apologize. This is actually a weekly. And you can see, obviously, this has been a very bearish week in contrast to what the market is doing. So is this a good trade idea to essentially be collecting credit around the 350 area, right? I've purposely marked that off here with this line here, showing you where the 350 level is. So if you think about the trade, if he's long at 347.50 and he's short 2 at 350, where is his pain point? His pain point is at 352.50, right? Because that's what would make a straight butterfly instead of pushing the wing out to 370 as he's doing here to receive a credit. I think the idea is okay. It's not the greatest credit, but it's also not that much risk. I don't really see Lulu rallying back up to that level anytime soon. I think the point I want to make with this trade is simply to illustrate to people that this is a fantastic way to collect credits in the market as opposed to selling naked or selling a vertical. Notice that in this situation, he's got a long in front of his short. So he is short calls at 350, but he's got that 347 option in front of it that's going to ease the pain a little bit if it goes up. So my overall take on this is yes, you probably should do this trade. I would prefer to do something with a little bit of a bigger credit in something like Lululemon that can be very volatile. I would probably figure out a structure where I might be able to widen that out a little bit for a little bit more safety. But in general, this is a perfect example of how a trader can take a bearish chart, find a resistance point that's somewhat above where current prices are, and instead of selling a vertical or selling a naked option, using a long broken wing butterfly to collect a credit instead. So congratulations to Janal. Thank you so much for writing in and playing Should I Do This Trade this week? And he will be receiving a free month of weekly options advisory. And that's our show for this week. Thank you, as always, for spending a little bit of your weekend with me. Quick recap on some of the items we discussed. Market is very, very bullish here. Buyers are in control. We know where those prior highs are. The ultimate buy point, I think, for a swing is going to be if we come into those prior highs. However, carry forward in your narrative if we don't. That's an even more bullish outcome, and don't be afraid to just kind of go with it, even though it may seem like the market is just too high, still overbought. That's how things are. New highs tend to beget new highs, right? Because you're in virgin territory, you're in that clear air up here, and there really aren't a lot of sellers up here, all right? Next week, Wednesday, after the close, NVIDIA is going to report. That's really the only thing I can see that could probably throw a wrench into this bullish narrative. If that stock was to have a relatively large gap down on their results, obviously it would drag the NASDAQ 100 futures with it, and probably the ES as well. And maybe there's some sort of corrective activity off of that, but just keep that in mind. That's a biggie. A lot of stocks tend to key off of those NVIDIA earnings in sympathy as well, all right? Thank you so much to our special guest, who was Michael Denblaker from the Stocks and Options room of the Live Trading Suite. Remember, if you'd like to check us out for free, you can actually get the Live Trading Suite, both rooms, for 6 months at no charge by opening an account with our partners at Tastytrade. If you could please, before you sign off from this video, hit the like and subscribe buttons. That helps the channel a lot. And as always, coming at you from beautiful Los Angeles, California, I wish you good trading and good night.